Kim, so good to see you. Today we are talking about the four biggest financial myths and the truth behind them. Some of the most common beliefs about money, retirement, and investing are myths, and believing in them can really hurt your financial future. So here are the top four. We start with number one, of course. The market always goes up.
Weren't we reminded that this wasn't true earlier this year?
Yes, we were.
Yes, historically, long term, the market does historically go up. However, we have volatility constantly, and you can even have multi years where the market goes sideways or down. So,
Yeah.
assuming the market always goes up is not a good thing. And that is why it is so important to have a solid financial plan in place, specifically as you're entering and nearing retirement. It is often unwise to have all of your money in the stock market and something that could go down at the same time you're needing to withdraw assets. So yes, long-term market trends upward, but in the short term, we always have to allow and prepare for those short-term deviations as well.
Absolutely. Myth number two, the 4% rule works for everyone.
Wouldn't that be nice if
It would be nice.
planning was as cut and dry as these simple rules? However, 4% rule has been thrown into doubt, I would say, over the past decade. There is no standard rule. What we like to do for clients is many times look at the overall need of the client. And oftentimes having something like the 4% rule that traditionally relies on the market to perform is not a great idea for those bare bones we need everyday needs. So we like to divvy it up in between, okay, what's your standard needs, making sure that basis is covered. And then for all the extras, we can put strategies in place, but it is not as cut and dry as just simply 4%. We have to have some flexibility in there as well.
Right. All right. Myth number three, my taxes will be lower in retirement. Why might retirees pay more in taxes than they were expecting?
Now, some people, their taxes might be lower in retirement. It's important to understand that in today's world, we are at historical lows. So if Congress doesn't act, for example, taxes are going to go up next year. Sometimes in people's working years, they are earning a healthy income that pushes them into a higher tax bracket. And then in retirement, they will scale back and be in a lower tax bracket. But another myth that we see often is people think that they will be spending lower in retirement, and that is not traditionally the case. So it's important to look at where we are in the here and now and where taxes might go and then plan for that. Those pesky RMDs may also end up pushing someone into a higher tax bracket. So again, that goes back to not only looking at the here and now, but what might play out in the future and planning for that.
Mm-hmm. Myth number four, I don't need life insurance once I retire. Why would someone need life insurance in retirement?
Well, it's going to be different for every single situation, particularly for married couples. What we always say is we look at the best case scenario, which is you both are sitting across from us at the table together. But what happens when one spouse passes away? Sometimes there can be a significant income drop, and then that life insurance would be appropriate to carry forward in retirement. Another way to utilize life insurance in retirement is actually through legacy planning. So some people do Roth conversions as far as trying to plan for the next generation, but life insurance can also be a way to shift taxable dollars into tax-free dollars for the next generation. So there's just a couple.
Really good point. I'm glad we get to talk through these myths, Kim. Again, it all comes back to putting that plan together and proactive planning, right? The sooner you can have this conversation with somebody, the better. So if somebody wants to talk this through with you, what's the best way to reach you?
The best way is to head to our website. It's got a bunch of different ways to contact us, www.young-wm.com, and we'd look forward to having a chat.
Great. Kim, thanks for your time today. I appreciate it.
Thanks, Erin.